If you're a business owner in Canada, you may be missing out one of the most powerful tools for protecting your wealth and reducing taxes, a holding company, HoldCo. But what exactly is a HoldCo and how can it save you money, protect your assets, and help you build long-term wealth? In today's video, I'm breaking down the top reasons why every business owner should consider setting up a holding company and how it can be a game changer for your financial future. Hey, if you're new here, my name is Danny Leung, Portfolio Manager and Senior Wealth Advisor at Zenith Private Wealth Counsel, IA Private Wealth, and I specialize in helping Canadian business owners optimize their finances, reduce taxes, and build long-term wealth. If you're looking for clear, actionable financial strategies, make sure to like this video, subscribe, and drop your questions in the comment. I'd love to hear from you. So what is a holding company? A holding company, HoldCo, is a corporation that owns shares of another company, typically your operating company, OpCo. It doesn't run a business itself, but acts as a financial and tax planning tool for business owners. Simple example, OpCo, operating company, your main business that earns income. HoldCo, a separate company that holds asset, investments, and profits from OpCo. Why? Moving excess cash, investment, or real estate into a HoldCo protects assets, defer taxes, and create long-term financial benefits. 1. Protect your assets from business risk. One of the biggest advantages of a holding company is shielding your assets from business liabilities. For example, imagine you run a construction company, OpCo, and your business is sued for damages. If all your cash and investments are inside the OpCo, they could be seized by creditors. Solution is by transferring profits into a HoldCo, those assets are protected because the lawsuit is against OpCo, not HoldCo. Key asset protection benefits: keep excess profits safe from business creditors, shield investments in real estate from lawsuit, reduce risk exposure for business owners. 2. Pay less tax with income splitting and dividends. A HoldCo can help you reduce your overall tax bill by using dividend strategies and income splitting. For example, your OpCo earns $500,000, but instead of taking all the money as salary, which is taxed at a high personal rate, you transfer dividends to your HoldCo. Dividends paid to HoldCo aren't taxed immediately, meaning you can defer taxes and withdraw funds strategically at a lower rate. You can also pay dividends from HoldCo to a lower income spouse or family member to reduce overall family taxes. Tax strategy: instead of withdrawing all profits and paying up to 50% plus in personal taxes, keep them in HoldCo and take them out gradually at lower rates. Tax efficient investing inside a HoldCo. If your business is accumulating cash, investing inside a HoldCo can help you grow wealth at a lower tax rate. Why this matters: corporate tax rate in Canada are much lower than personal tax rate, often between 12 to 15% versus 30 to 50%. Investing excess cash inside a HoldCo lets you benefit from lower tax rate while keeping funds protected. You can hold stocks, bonds, real estate, or even invest in other businesses within your HoldCo. For example, instead of taking $200,000 in extra salary and paying up to 50% in taxes, leave it in HoldCo. Invest in stock or real estate and grow wealth without immediate tax consequences. Key benefit: HoldCo defer personal taxes so your money grows faster. 4. Smooth business succession and selling your business. If you ever plan to sell your business, a HoldCo can help you reduce taxes and pass wealth efficiently. Lifetime Capital Gains Exemption. If you sell shares of qualifying business, you can shelter up to $1,016,036 in 2024 in tax-free capital gains. But if your OpCo holds too much cash or investment, you might lose this exemption. So solution: move excess cash and assets to HoldCo before selling to ensure eligibility for your lifetime capital gains exemption. For example, you plan to sell your OpCo for $2 million. If OpCo have too much passive income, you lose your lifetime capital gains exemption benefit. By transferring assets to HoldCo in advance, you qualify for the exemption and save hundreds of thousands in taxes. Bottom line, HoldCo makes selling your business far more tax efficient. Flexible retirement and passive income strategy. A HoldCo can help fund your retirement tax efficiently by allowing you to withdraw money strategically when needed. For example, instead of drawing $100,000 per year, which pushes you into a high personal tax rate, withdraw $50,000 per year from HoldCo. HoldCo lets you spread out withdrawals over time, reducing tax and keeping you in lower tax bracket. You can also invest in dividends, paying stocks, or real estate inside HoldCo, creating a passive income stream for retirement. Best for business owners who want to slowly transition into retirement. Those looking to fund retirement without big tax hit. Who should set up a holding company? A HoldCo makes sense if your business generates more cash than you need to live on. You want to protect assets from lawsuits and creditors. You're looking for tax-efficient ways to invest your money. You plan to sell your business in the future and want to minimize taxes. You want to build long-term wealth and retirement income. Who shouldn't set up a HoldCo? If your business doesn't have excess profit or or investments yet, you may not need one. If you withdraw all profits every year as salary, a HoldCo won't add much benefit. Should you set up a holding company? A holding company is one of the most powerful tools available to Canadian business owners for tax planning, asset protection, and long-term wealth building. Protect your assets from business risk, reduce taxes with income splitting and strategic dividends. Invest smarter inside HoldCo and grow wealth tax efficiently. Optimize your business sale and maximize lifetime capital gains exemptions, tax savings. Create a retirement plan with tax-efficient withdrawals. If you're a business owner and want to know if a holding company is right for you, click the link in the description to book a free consultation with me. Setting up a holding company could be a game changer for tax efficiency, asset protection, and long-term wealth building, but every situation is unique. If you want to know whether a holding company is the right move for your business, book a time with me or my team. We'll walk you through your options and help you create a tax-efficient strategy tailored to your goals. Click the link in the description to schedule your consultation today. Thanks for watching. Don't forget to like, subscribe, and drop your questions in the comments. I'll see you in the next video.